Hi everyone, going to continue my theme today of trading US equities and doing so using a spread betting account. I'm based in the UK and it's a tax efficient way of trading if you're based in the UK, and there are certain things that you probably should be aware of with regard to spread betting accounts, how the orders work, and I'll be going through a couple of those things today. But basically, trading US equities using a spread betting account is a good way when you know how to trade, when you can pick your trades out. It's a good way to spend an hour each day on the US Open. It's really good, can be a really good way to spend that hour. And in actual fact, for many people, it may be the only hour of the day that they spend at work. Trading for a living can happen very, very efficiently and very, very quickly. And the US markets are the biggest markets in the world. There are millions of traders, lots and lots of money being thrown at the markets over there. And so the markets tend to move quickly, and that's one of the things that short-term traders are looking for. And so a few stocks that are moving quickly each day are called stocks in play, and when you've found the stocks in play, it's just a question of making or waiting for a setup to appear on one of those stocks. And I got one behind me. Took a screenshot of it, and I'll talk you through what I saw, the reason that I took this short trade, went short the market here, or tried to, and so the reason for that and how to read the charts based on spread betting. Hope you found it useful. So here's the chart. This is Beyond Meat, a US company, and I've shorted the market. Or at least, as I say, I thought I'd shorted the market. I've pressed this red button here and I'm going short here. Or at least I thought I was going short at £10 per point. These are the number of points involved. This is $122 and it actually translates in points to 12,200 points. So at £10 a point, I've gone short, or I thought I had and I hadn't. And the reason for that is because I've got this message here. And it says, this market may not be sold to open due to stock borrowing restrictions in the underlying market. And that means that my order was rejected. And what does that mean? It means that this market isn't able to be shorted with this broker at this particular time. So this is something that happens occasionally, not just in spread betting, in CFDs as well, and also in markets for real. I mean, basically shorting markets means that there has to be borrowing taking place, and if there are borrowing restrictions and nobody is prepared to lend the money, then you can't short. And so that's a pain in the neck, and it's a pain in the neck because this is a perfect setup. This is absolutely perfect. Look what's been going on here. Okay, so the stock is down nearly 3% for the day. These are the longer term exponential moving averages, these wavy lines here. Long-term exponential moving averages. In the first minute of the trading day today, the market shot up and rejected violently, and that is a sign that the market doesn't want to go up. It doesn't want to go up, and it came down, and it came down below its open, and it tried to press up, back up, and failed, and it failed 1, 2, 3 times, and it started going down. So the market's below all of its exponential moving averages. It's below the pivot point for the day, and you can see that it's in a downtrend. And when these type of stocks that are highly volatile start moving, they tend to make quite big movements. Look at these points. There are This is 12,500, 12,600, 12,700. So there are 100 points or $1 between each of these prices here. 100 points. So at £10 a point, that's £1,000 in there. And so that's, these are highly volatile stocks. The average true range is high on these stocks. And actually, if you find a good setup, you sometimes only need to be in a trade for a minute in order to be able for the trade to pay off. Minute, 5 minutes, 10 minutes, not long at all. And you've got your money for the day. And the key is to find the setups, and I've got one here. I'm absolutely, as certain of it as I can be. There's always a percentage probability with these trades. And from here, with the market going down, if it goes up, I'm going to have a stop above this high here, and I'm entering here. So there's about a 50-cent risk, or 50-point risk, £500 risk in terms of point sizes. And one of the other things that is really, really important with this particular trade is just look at what's been going on here. If I put this horizontal line in here, this is a perfect technical setup. You've got this level here. This level here is providing support for prices. Support, support, support. 1, 2, 3. And then the support is broken and it becomes resistance. It becomes resistance. It's resisting prices going higher, and when support becomes resistance, traders look at this sort of thing and they analyze markets for support and resistance levels, and they trade based around that. So this just adds even more weight to my theory that this market is going down. Low of the day's here. We're just above the low of the day, and I have pressed the sell button at 12,098. Now, that's different from this price here, which is 12,125. Because that's the buy price. The sell price is 12,098, the buy price 12,125. Okay, so the difference between the two is the spread. That's the broker charge. So I'm selling at 12,098, and if I was to buy back immediately, I'd be buying back at 12,125. So I'm being charged about 20 points, and so that's 20 cents, and that's probably the limit of where I'd find it acceptable. Anything more than that, if the market wasn't moving so quickly, if these bars weren't quite as big, then that wouldn't necessarily be great. 20 cents, not great, but not the end of the world when each of these bars is, 70 points long, 120 points long here, that one. So, about 100 points in total. And so the percentage of charge or fee to potential profit is acceptable. So I've got about a 50-point risk on this particular trade, but I can't go short because the broker won't take my order, isn't able to take my order. And it's frustrating. It really is frustrating because, why can't they take my order? They're only operating as a broker, but the reason is because they're trying to take the same trade on the market for real. They're trying to take this trade with me, and they're not able to. They're not able to get the trade, and so they won't accept the risk that I'm successful. There's several ways that brokers can manage their risk, but if they're not able to either offset your trade or take the trade with you, then they won't, you know, they won't accept the trade as it stands. So they're trying to go short at the same level I'm trying to go short with them, and they're not able to do so, so they won't accept my order. Fair enough, it's fair enough, but it is frustrating, and here's why it's frustrating. Because, you know, that was all happening here, and you can see I've tried to hit the sell button again here. This market's gone down from here to here. I'm trying to sell again, and I'm getting the same message. Sometimes these messages, you know, they last all day, or it's just a permanent thing, and sometimes they may last only 5 or 10 minutes. So I keep trying. I still think if the market breaks these lows here, we're at 12,100. We could be down to 12,000 or $120 quite quickly. And so the risk for me is still manageable here. Stop will be up here, entry here, target down here somewhere. So greater than 1-to-1 reward, potential reward to risk. And I'd have been in the money if the first trade had actually have been executed on time, and it wasn't, and they didn't accept my order. And here's what happened next. So you can see now that the market has come down and it's broken the 12,000 level. We're actually sitting on the support and resistance, daily support and resistance level of S1 here, and that's at 11,973. So there was over £1,000 potential profit in that trade for me, and I didn't get it. Fortunately for me, I trade with more than one broker, and although I didn't get it at the same level, I did manage to get some money out of that particular trade. But the principles behind trading US equities are the same as trading other markets. Read the price action and trade with the trend when there is a trend. And really, you know, if it's a ranging market, it's going to be more difficult for you. And you need to be a highly skilled professional trader really to be trading in ranges. There's always, look at this, there's a definite, you know, there's a support level here, there's a support level here. Both of them have been broken, and the market is going down. The stock's down 3. And it's a highly volatile stock anyway, so the odds are it's going further down, and it did. So I hope that you found that useful. I'm going to take my frustration out on my broker. No, I'm only kidding. I'm not going to take my frustration out on my broker. It's part of what happens. It is frustrating, but there you go. And so, you know, I'm always open to helping people. If you're looking to trade, if you want to discuss trading US equities or trading UK equities or any other markets, then just let me know. I have trading courses that enable people to read markets and read price action, and that's going to be what you're going to need to do if you want to trade for a living. So my name's Anthony Beardsall. Thanks ever so much for joining me, and I'll catch you on the next video. Hope you found that useful. Have a good trading week. See you soon. Cheers. Bye.